The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Good evening, ladies and gentlemen. Welcome to the show. I'm your host, Dan Theok, Senior Vice President of Investment Banking here at Mayberry Investments Limited. Joining me this evening are fellow panelists, Executive Chairman Christopher Berry and CEO Gary Peart. Welcome, Chairman Chris. Welcome, CEO Peart.
Good afternoon, Dan. Good afternoon, guys and girls out there.
Today, we're really excited to talk to you guys about our bond IPO, a new conservative way to make more money with your Mayberry. So stick around to hear more about that. After the presentation, we'll go straight into some Q&A. So remember to ask your questions in the live chat, and we'll answer them at the end of the show. If you're a fan of the program, I remind you to like and subscribe to the channel and hit the bell so you can stay up to date with the content. Before we get started, I'd like to take this moment to remind you, as usual, if you're looking to expand your portfolio or embark on your very first investment journey, Mayberry can place you on track to financial freedom. Follow us on social media at Mayberry INVJA to learn more. So it's time to get into that discussion. Chairman Berry, welcome. I'm not too sure if I heard you respond. Just want to make sure you're hearing us and we're hearing you.
Loud and clear.
Very good. And great. So with that, folks, I want to jump straight into the presentation. I want to say it feels like Christmas has come early. And we want to just talk to you about Mayberry's bond IPO that's coming up. On the first slide, if I can see that, first slide asks, what is a bond? And a bond is a loan taken by companies or governments at a certain rate of interest for a predetermined period of time, and it's repaid usually at maturity. Unlike traditional loans, a bond is usually tradable and can change hands before it matures. The debt instrument requires the issuer, who is the borrower, to repay the bondholders, who are the lenders or the investors, their principal amount borrowed plus interest over that specified period of time. Bondholders basically have an IOU or a promissory note from the issuer to repay the debt. The IOU is evidence of a contractual lending relationship between the bondholders and the issuer. So bonds are things we see in the marketplace issued by companies or issued by governments. Next slide. Why do people buy bonds? So investors buy bonds because they provide a predictable income stream. Typically, bonds pay interest quarterly or semi-annually. And if the bonds are held to maturity, bondholders get back their entire principal. So bonds are usually a way to preserve capital while investing. And bonds can help offset exposure to more volatile stock holdings. And it's worth noting that a bond or any type of fixed note instrument is a very, good asset class for any investor to have in your portfolio. So you want to have, real estate, you want to have bonds or fixed note instruments, and you want to have equities, wherever possible in your portfolio. Companies, governments, and municipalities issue bonds to get money for various things, which may include providing operating cash flow, for financing debt, or for funding capital expenditure programs. For governments, it can be schools or highways or hospitals or other projects. And for corporates, it's usually, some business-related capital expenditure. On the next slide, what are the benefits and risks of a bond? Well, bonds offer capital preservation and a predictable return while generating interest income for the investors. And with any investments, bonds definitely have risk. These risks include the credit risk, the risk of the off-taker, the issuer, interest rate risk, depending on the type of interest rate. If it's a fixed interest rate, then your risk could be the fact that interest rate in the market's going to be going up higher and you're holding a lower rate. You have inflation rate risk. Obviously, your real return is the gross interest you earn on the bond, adjusted for what levels of inflation are around you. You could have liquidity risk while you've invested in that bond. That money may not be liquid, depending on how the bond is structured. And then you could have reinvestment risk or callable risk. Callable risk being the risk that the issuer calls back on the bond early or something like that. So when we talk about the Mayberry bond, we'll talk about how we're mitigating against all of these traditional types of risks and why we like the bond and why we've structured the way we have done to de-risk it for our clients or the investors. What types of bonds are there? And so this speaks to, generally speaking, in the market, what types of bonds you would typically see, and I spoke very briefly to it. We have corporate bonds or debt securities, which are issued typically by companies, whether a public company or a private company. You have bonds that are rated by external credit agencies and would be considered investment grade bonds. We have high yield bonds. These are bonds which aren't typically rated, or they have a very low credit rating, which implies a higher credit risk, and therefore they typically pay a higher interest rate. And then we have municipal bonds or bonds issued by governments, which are called munis, and these are debt securities issued by states or cities or counties or other government entities. And we talked earlier about how different governments raise money through bonds. In the US, where that market is very advanced, you will see things like catastrophe bonds and far more creative structures as well too. I recall when Florida Light and Power, after they had Hurricane Andrew, issued a 30-year bond to help with their disaster recovery program as an example. The bond indenture or the bond documents that support the contractual agreement between the issuer and the bondholder, and they usually cover the main bond features such as the coupon or the interest rate, the principal when it's going to be repaid and what currency, and the maturity date. 2, it covers the size of the issue. It typically speaks to the size of the issue, both at the global level as well as individual investors. Usually there might be some minimum investment amount. It speaks to any property or assets that are being pledged as security. It typically details the financial covenants and any restrictions around the use of funds or restrictions on the company itself in relation to the use of those funds. And then lastly, the bond terms usually speak to the redemption rights or call privileges of the issuer. This is to say a bond could be issued for a period of, say, 5 years, but the issuer may have the right to recall the bond or pay it early after, say, 2 years. And then it would typically detail any penalties or make whole provisions or any other conditions that the issuer will have to respect while calling that bond. Some of the key terms that you should always think about when investing in any bond are, 1, the interest rate, which we call the coupon, and the type of interest rate. Is it variable or is it fixed? Is it subject to change, etc.? The maturity period or the duration. You need to know what tenure you're investing in. Is it a 13-month, a 24-month, an 36-month, 5-year, 10-year? You need to know what is the yield. So since bonds are bought and sold between investors, just like stocks, the value of that bond may change as interest rates change within the market, and that could impact the yield to maturity on the bond. The principal, that's the 4th important key term you want to know, and appreciate whether you're buying the bond at face value, which we call par, if you're buying it at a premium or you're buying it at a discount. And typically when the bond is trading on the secondary market, you'll see that certainly being very applicable, but some bonds from day one are sold outright at a discount or at a premium. It just depends. And then the covenants, you typically want to understand what covenants are the issuer or is the issuer committing to honor. Having taken your money and using it to invest and grow the business, he may agree to certain financial covenants. I won't exceed a certain debt to equity ratio or a certain debt to EBITDA ratio, or I'm going to ensure that loan to value ratio remains at a certain level, or I'm going to make sure my liquidity remains above a certain level measured by current ratio typically, or debt service coverage or interest coverage. So typically you want to understand what covenants are embedded in the key terms of the bond. Next slide, I want to speak more specifically now that we talked about bonds in general and how these instruments work, and most of the bonds that we see tend to be fixed income bonds as opposed to variable rate bonds. We want to talk about Mayberry's public bond offering, which provides you with 4 different investment opportunities, and we're going to call them 4 tranches of bonds. And the tranches are basically delineated by tenure. So the first tranche is the shortest tranche, which is 13 months, and the interest rate that we're offering is 9.25%. So when this bond is issued, it will mature 13 months later. You'll get back your entire principal 13 months later, but in between, you will be getting interest payments at a quarterly frequency at a rate of 9.25% per annum. The second tranche goes a little step longer. It's 18 months, and therefore we offer a higher interest rate because you're parting with your money for a longer period of time. That interest rate is 10%. So in investing in this bond, you would get back all of your principal after 18 months, and you would continue to get your interest payments quarterly. The third tranche goes a little bit longer and would be 24 months. And again, the interest rate here becomes a little bit higher, 11%. Principal always remains the same. You get back your maturity at the end of the tenure or the duration, and your interest rate is always paid quarterly. And the fourth tranche, which is sort of like a medium-term bond, is 36 months, and there we're offering an interest rate of 12%. And again, the principles remain the same about when the loan is to be repaid and what the interest frequency is. For this bond, Mayberry is trying to raise $5 billion in the market through these four tranches, and we have the right to upsize that if it's oversubscribed to $7 billion. The minimum subscription amount, since this is a public offering being offered to the public, is 20,000 J, and you can invest in further increments of $10,000 beyond that. And then Mayberry makes very clear what its use of proceeds are. The company intends to use these proceeds to expand its portfolio of security loans and for general corporate purposes. So in general, Mayberry is going to be using this money to grow its own loan book, which we lend money to our clients, and it's always going to be secured. And we always have a certain minimum loan to value ratio, typically requiring twice the coverage for equities and maybe 35% XX coverage for real estate. So all of these bonds will be secured. All of the monies that we deployed will be secured by acceptable securities that Mayberry has done its due diligence and feels comfortable with. And so we're borrowing this money to help grow our loan book and increase our business. Today, our loan book is perhaps somewhere in the region of $7 billion. And so if we were to raise an additional $7 billion, that would give us the potential to double our loan books. The key dates to remember in the prospectus, and again, the prospectus, you can view that at Bondberry or at the JSC website or at any of our participating brokers. And the three participating brokers that we have include Sagicor Investments, SSL, Stocks and Securities Limited, and Proven Limited. Those are the three selling agents. And of course, Mayberry, of course. So there are only four places where you can access this bond from. And I feel compelled to make that very clear because I'm told already that there are folks out there claiming to be affiliated with this. There are only four ways to get into this bond. All applications will be processed electronically. And so you must feel free to contact any of those four brokers to make that investment. Key dates to remember, it's going to open this Friday, December 2nd. We'll be closing on January 6, 2023. Of course, we have the right to close earlier if we're oversubscribed. The interest payment dates, which are quarterly, we've determined the interest payments dates. So the first payment date would be March 30th, June 30th, September 30th, and December 30th in each year. And for any bond that ends in a period that's not a quarter, then the final interest payment would be when that bond matures, which would be the case in the case of the 13-month instrument only. You would have 4 quarterly payments, and then the 5th quarterly payment would be with the maturity after 13 months. So these are the 4 tranches that you need to remember, key dates you need to remember. How can I benefit from Mayberry's bond IPO? Well, Mayberry's bonds will provide a safe and conservative way for you to earn interest on your money. Remember, we spoke to bonds and you receiving your interest quarterly. In fact, Mayberry's bonds are providing higher interest rates than the average saving rates at traditional banks, thus putting more money in your pocket. The bonds will also pay interest quarterly, thus providing stable and consistent returns. So for those of you who have, money sitting down at the bank that you're not really utilizing, you're probably earning 2 or 3% on your money, here is a much better opportunity for you to invest your money where you can earn a minimum of 9.25% in the smallest tranche. And then the greatest thing about the bonds, the way it's structured, we will talk about that a little bit more, is it's going to be listed on the stock exchange, and these bonds will be trading in the bond market. So even if you buy a 13-month bond, and after 6 months you have need for liquidity, you would be able to go and sell your bond on the stock market. So you will have great liquidity because it's a listed bond, and you won't have to actually hold this instrument to maturity. Lastly, Mayberry bonds are fully secured and will be traded on the JSE market, which will create necessary liquidity for investors with readily available market prices. How much can I invest? On the next slide, as we mentioned before, the minimum investment amount is 20,000 Jamaican dollars, with additional increments of 10,000, and there's no maximum. And I'll be certainly asking this question of Gary or Chris. Why did they go this through the public bond offering? Because in the past we've always done these as private bond raises to accredited investors only. And that's, we do a lot of that business. In fact, I literally just closed this week a 25 million US dollar bond offering. And in that case, it was to accredited investors, and the minimum investment amount was 10,000 US dollars. And that's what we typically do. So I'm really excited about this bond IPO, which opens up those opportunities to regular investors as opposed to accredited investors, which means high net worth individuals. How can I apply? Investors can apply at www.bondberry.com. Those persons who are interested in subscribing for the Mayberry secured bonds should read the prospectus in its entirety, inclusive of the full terms and conditions of the invitation as set out in section 6.14, the risk factors in part 11, and then follow the application guidelines which are specified in Appendix 1. Additionally, feel free to contact Mayberry or your preferred stockbroker or any of the three listing selling agents, as I mentioned before, Proven, SSL, and Sagicor. Or you can go to the JSE website to also download prospectus. Next slide. What's the role of MIL in this bond in a portfolio? Since governments began to issue bonds more frequently in the early 20th century and this gave rise to a more modern bond market, and investors have purchased bonds for several reasons: for capital preservation, for income diversification, and as a potential hedge against inflation, basically. Capital preservation, this speaks to the fact that the bond returns principal at maturity, unlike stocks. So it has a specified date when you get back your money. And this makes bonds enticing to investors who don't want to lose their capital or who don't want to lose capital and those who have future liability. Bonds offer a set interest rate that's generally greater than savings rate. In this case, substantially greater. Like I said, average interest rates out there are probably 2-3%, and our lowest rate on any of these bonds is 9%. The second reason people invest is because of the income and the fact that most bonds offer a fixed income, and the bond issuer gives the bondholder interest payments quarterly in this case, and so it's very predictable. And capital appreciation, bond prices can rise for numerous reasons, including a decline in interest rates and an issuer's improvement in credit. So in this case, we think at the rates that these bonds are being issued, we believe interest rates in the market have probably at or near come close to peaking. I actually honestly expect interest rates to start falling off in the next 6 to 9 months. And so I think now is a great time to be locking in certain levels of interest as investors. And so we really do think it's a great opportunity for investors to have stable, predictable income for the next 13 months if you're in tranche 1, 24, 30, or 36 months, depending on which tranche you choose. And it's a potential hedge against economic slowdown. So bonds can help protect investors against economic slowdown. And that's also important to know. Again, folks, remember to send in your questions, because as soon as we finish, I will start a little chat with Chris and Gary to expand a little bit more on it. And we look forward to receiving your questions and expanding on any concerns you may have. Some of the frequently asked questions we have were: how do bonds work? How are bonds different from shares? Can bonds provide protection against rising inflation and rising interest rates? Are there different types of bonds? And will I get my money back? So those are some of the frequently asked questions. There are 5 of them there, and I'll make sure we cover them in this discussion. And so I want to kick off firstly with Gary Parrott. First one I want to ask you to speak to and expand on, and as you see fit, is What's this concept of bonds providing protection against inflation or rising interest rates, and are there different types of bonds? I just want you to comment generally about that, and then feel free to speak to the bond, the MIL bond IPO as you see fit.
Thanks, Dan. Thanks, everybody out there. Well, as you know, all bonds aren't equal. When you speak about protecting against inflation, there's what is called the real rate of return. And the real rate of return, is usually calculated as your nominal rate of interest that you're getting minus the inflation for the period. And, give or take over the last year, inflation has been running somewhere around 8 to 9%. And so what that means is that if, for example, you buy the 3-year bond that's on offer, you would actually make a real return somewhere around 3 to 4%. Simply because the interest rate on the bond is 12%. If you assume interest rate is 8 to 9%, that differential is 3 to 4%.
So Gary, what about the man who has his money in his savings account earning 3%? What's happening to him?
Well, if you use that as an example, so your nominal interest rate is 3%, and if inflation is at 8%, it means that your real rate of return would be negative 5%. So even though in that instance you are earning 3%, because inflation is above what you're earning, you'd actually be making a negative real return.
Got it.
So, when people use the word colloquially, using bonds to hedge against inflation, it means that the rate of return you're getting from the bond supersedes.
Great. I think Gary froze up for a second. So let me switch to the chairman until, Gary, I think you just unfroze. Go ahead, Gary.
Yes. So what I was saying is that what it means is that, as a hedge, the bond gives you a higher rate of return than inflation. And ultimately that differential is what actually will help you to fundamentally grow your investment.
Got it. I appreciate that. Tell me, $20,000. It's and a public bond offering. I mean, we haven't seen this for a very long time. It's very creative. What went into your thinking? I mean, surely you could keep doing this with the high net worth and the accredited investors, where they need to come up with at least $1 million. Why have you gone public, and why have you made a threshold as little as $20,000?
Well, one of the ethos of Mayberry is excellent customer service. And over the years, the cost of servicing customers has been very expensive, especially for the smaller customers. And we at Mayberry did not want to extend our brand to another set of customers if we did not think we could service them accordingly. And, based on technological advances, because one of the beautiful things about this bond is that everything is electronic. Your funds are coming in electronic. We're going to pay your interest electronically. We're going to pay your principal upon maturity electronically as well. So there's no need for you to be giving anybody any cash. If you're a Mayberry customer, you just transfer the funds to your account. If you're a customer of another institution, you just give them instructions and they send it to Mayberry and vice versa. So because of that, it is now significantly less costly to service all the customers out there. And, it's with pleasure that Mayberry has put out this bond, because we can finally attest and say, hey, we can service all of the holders of monies down to $20,000. And the other key point is that Mayberry has engaged the JCSD, the Jamaica Securities Central Depository, who is going to oversee the different tenets of the bond, etc. It's an independent third-party entity that ensures that what we've put in the prospectus on behalf of the investors, Mayberry does carry out and follow through on all of those warranties that they've asked for. So it's just a perfect and wonderful time to do this, and we're looking forward to serving all of these new customers that come in. And at the end of the day, as you've just said, investing with Mayberry, you're going to get a nice hedge against inflation, especially in these tough times.
Chairman Berry, next question is for you. I mean, What do you plan to do with, $5 billion? We heard Mayberry say lots of fancy words, but you're the executive chairman of the business. What's your vision and dream? What are you thinking?
Well, Dan, as you know, we have quite a good sized loan book, and right now we have a lot of demands for loans on the loan books. We actively give loans against our securities, whether that be stocks or bonds or any other securities that we trade in. And that helps to make the accounts of the clients a lot more liquid. And they like when they can invest, but when they need some money to do a quick deal outside of the things that we offer, they see a nice piece of real estate they want to buy, or they see a business that's going for a good price, they can go in and scoop it up and then keep going. So it enables us to reach out to more people and give more credit.
Absolutely. So you want to grow your loan book business basically, which is 100% secured. In fact, in most cases, 200% secured for equities and 135% secured for real estate. Thanks for that. And Chairman, what's your vision? I mean, obviously you had to sign off on this prospectus. I'm sure you could have just as easily gone and raised, $5 billion from accredited investors. Why did you want to make it available to the public?
Well, I mean, I think it's a great opportunity for the individual investor. They don't normally get to access securities like these unless you're a wealthy person. So, we started small way back in the day, and we want to give the average hardworking Jamaican a chance to earn a good return on their money.
Well, Dan, if I could supplement the executive chairman's point, it's one of the questions I've been asked. As you said, why no? Why are we doing this? And whilst it's Mayberry's first public bond offer, the fact is that we have done billions, tens of billions of bond deals privately. And those deals are only accessible to accredited investors. And if you're not an accredited investor, you have to invest a minimum of US $125,000. So that's almost, what's that, 18 million Jamaican.
Yeah.
And so what happened is that we saw a situation where larger investors, larger institutions would buy some of these great deals that we have and then break them up and sell them back sometimes 5 to 6 points lower. And I can't speak for Chris, but over the last couple of years, I've been bombarded with people saying, "How can I participate?" Yeah. And, we're so happy that we're able now to come to the market, because I think we'll be able to allow people for the first time to participate in these types of transactions. I think if you can help me, Dan, my recollection is that for 2021, I think the amount of bonds in issuance is in excess of 400 billion Jamaican dollars.
That's correct.
And so the bond market is very vibrant. So this is just another way of putting bonds out there. And again, it's now giving the average Jamaican who can find $20,000 or more to make an investment. And I'm just happy to be a part of the organization that is helping the average man to grow, earn more money, and become more wealthy.
Yep, and it reminds me, Wigton's always doing groundbreaking things. It reminds me of the Wigton IPO, which is one of the largest IPOs at its time, and certainly in terms of subscribers, we brought 30,000 new persons into the stock market. It reminds me of how Mayberry helped promote and launch the Junior Stock Exchange, and now that's, brought 40 new companies to the market in a market that was previously stagnant. So I too congratulate you both for making this a public offering because, like I said, we've raised, several billions of dollars this year, but always in these private exempt distributions for high net worth individuals. I just closed a $4 billion raise. Didn't take me 2 weeks to raise the money, but again, just to a handful of accredited investors. So it's great to see this opportunity now being offered to the average Joe. Some people have the money under the mattress. Some people have it in a savings account with one of the oldest banks, and you're earning 2 or 3%. And as Gary just said, if you're earning 3% on your saving and you put that money up for a year, by the time you take it out to use it, you've really lost 5% in value because whatever you were going to buy with it has probably increased in value by 8%. And for those of you out there throwing partner, you really need to be investing your money more wisely. So I commend you both for supporting this public offering because it's going to open up a window for folks who typically couldn't get into it. Okay, so with that, let me turn to a few questions that I see coming in, and I do want to make one clarification. Again, JMMB is not a selling agent of this particular bond offering. I noted who the three selling agents were. They are SSL, Proven Wealth, and Sagicor. Thank you, Gary, for that. I think we will have one or two more come on board. I'm actively talking to two, but it would be inaccurate to call those names until they've signed the paperwork, until they've caught the vision and come on board. Again, it will open Friday, December 2, and could be stay open to as long as January 6, but we also have the right to close early if it ends up being oversubscribed or we get to where we want to get to. Okay, so let me address a few questions out there.
Dan,
Yes,
just
Gary?
before you go to questions,
Sure, right on.
I would just like to take the opportunity to make just to supplement your points that you made a while ago.
Sure.
Even if your institution is not a selling agent, you can still participate. I think that's clear. I mean, whilst we have authorized selling agents, if you, the individual, have a desire to invest in this bond, and even if your institution is not a selling agent, you can participate.
That's correct. That's correct. In fact, to participate, let's just explain a little bit about that. You simply need to have a JCSD account or any brokerage account, and with that, you would actually be able to participate. Now, if you don't have a JCSD account, you've never bought a stock or a bond before, then you have adequate time to be able to go to any of the stockbrokers or selling agents that I just listed. Go through a very simple KYC process, know your client, know your customer process, get yourself registered legally to be a JCSD member and have the account, and then with that, you would be free to buy the bonds. So I encourage you guys out there, this is a great opportunity for those of you who don't have bonds in your asset class of investments currently. It's a great way to start investing. So you want to have some equities in your portfolio, you want to have some fixed income instruments or bonds, and then you want to have some real estate type investments. But a bond is a great way to get going as you start building up your portfolio. And yes, David Rose, JMMB was noted as a selling agent. We didn't sign the contract finally, so I'm going to do an addendum to correct that unless they do sign within the next day or two. And that's not a threat to them. That's just a fact. So we're going to have an addendum updated by Friday, which will list the new list of selling agents. And I expect to have at least 2 persons there and potentially to remove JMMB from that list. Okay. The issue of withholding taxes. Somebody's asking about...
No, Dan, you mean you're going to add JMMB, keep them up to this?
If they sign, yes, sir.
I mean, when they sign.
Absolutely. Great. So somebody's asked the question of withholding tax and whether the bond will be subject to withholding tax. As far as I know, Gary, the issuer MIL is listed in Jamaica, so it will be subject to withholding tax.
Yes, it will be.
As would be all interest that you
Bonds.
earn from issuers in Jamaica. So even when we say you earn 3% at the bank, that's 3% growth before withholding tax. So you always have to pay withholding tax once the issuer is a Jamaican entity. You have to pay your fair share of taxes, so to speak. So we are comparing apples with apples, guys, when we speak to a 925 bond and the fact that you do have to pay some withholding tax. Okay. Other
So what
question?
I would add,
Sure,
Dan,
sure. Mhm.
the withholding tax on interest is available for any instrument or security that pays interest. And we're happy that we're collectors on behalf of the government to remit those taxes. And you have to give the government their fair share.
Absolutely. And while withholding tax is applicable for the most part, and we've been talking about this investment opportunity as if it's only for retail investors, this opportunity will also exist for institutional investors. So we do expect pension funds and large institutions to also take up some of these bonds, and certainly for the pension funds, as long as they can produce the relevant paperwork, or charitable organizations, and in that instance, the withholding tax would not be applicable. And as Gary mentioned, the bond will be administered by a trustee. So there's an independent organization functioning as a trustee who will ensure that Mayberry remains compliant with all of the terms of the bond. And they will actually make the payments. We'll pay one large payment to them. They will look at the current list of bondholders and then pay out the interest to all of the bondholders on record. And that's important because the bondholders on record, because this is going to be trading on the bond market of the stock market, could change. Folks could decide that they want to sell the bond for liquidity, or it could well be in 6 months' time, if interest rates start to trend back down, that these bonds would therefore likely trade at a premium. So, there's an opportunity that people would just be selling to make a profit on the bonds. And so that's something that could likely happen. So I do have a question in here I want to take the first question from Jaboy, which says, if you think interest rates are peaking, why don't you wait until the rates are lower to issue your bond? And so I'll take that question. That one's pretty easy for me because we have large pent up demand for loans. We would like to go ahead and service those loan demands. And so we feel quite pleased to go ahead and raise money at these rates so that we can continue growing our debt business. And even if it means we're operating on slightly thinner margins, that's fine. What we want to do is make sure we can service our clientele to ensure that they are satisfied and their needs are met. So we're happy. And that's why we've structured the bond structured this way, Jaboy, because it could well be that we come back to the market in a year or 2 years' time to refresh, to upsize, to do additional raises. But we definitely have huge demand for loans right now, for credits that we've assessed and and clients that we know and feel very comfortable for. And so we're just trying to fund our business so that we would be able to deploy that capital. And someone asks, if we were to
So,
raise. Go ahead,
Dan,
Gary.
before you go on,
Yes.
I would just like to add to that question. At this point, we feel interest rates will be peaking over the next couple of months. I mean, it was supported by the BOJ's view. They want to pause to see the effects and the impacts, etc. And everything we see suggests that rates might peak and start to trend back down. But the simple reality is that we might not be 100% correct. Interest rates can stay at this level for 6 months. We could have an external thing that occurs, and rates could potentially go higher. So it's not 100% certain, which is one of the reasons, as you have noted, we have laddered the different tranches. We're going from 13 months all the way out to 3 years. You really don't know what's going to happen. And to support your point, you do have the demand now. So you have to satisfy the demand. And the reality is that, you could wait, the demand gets bigger and rates don't move. So we are not sure exactly what's going to happen, and which is why we have laddered it. So, I mean, I love the question. And I said, I just wanted to supplement your answer to just explain to Jaboy is that, we agree with him. We think rates are peaking, but we could be wrong.
And we do business every day.
Say again, Chairman?
We do business every day. Next year we'll be doing business too.
Exactly. So we would have, raised 20, 30 billion this year. Next year we want to raise 20, 30 billion again. So we can't pause to wait for the perfect timing. We have to just, keep moving and keep satisfying the demands of our clients, or they're going to go somewhere else. Chairman, what general outlook, for the next 12 years? How do you feel about Jamaica specifically, the prospects in terms of macro level inflation, interest rates, GDP growth, maybe debt to GDP. I mean, how are you feeling about Jamaica over the next 12 months and in general?
Yeah, so for me, I think the big thing is the fiscal responsibility framework. As long as there's no change in that by the government, I think the private sector will continue to expand. And when I say the private sector, I don't mean the PSOJ. People always think that the private sector means PSOJ. I mean, private sector is everyone who owns a business that's not government in my book. So, I think the fiscal responsibility framework has created a real opportunity for Jamaican businesses. As far as liquidity is concerned, there's no crowding out by the government. Interest rates are on average much lower than they would have been in the old scenario. So even at a time like this, if we didn't have this fiscal responsibility framework with what's happening globally, rates would be a lot higher than they are now. So you notice factories and big business expanding. You drive around Kingston, the North Coast, you can see a lot more construction taking place. This is all because of the fiscal responsibility framework. So, I'm very bullish on Jamaica. I mean, as I said many times on this program, 2014 was like a real watershed year for us. We sold off most of our securities abroad, brought all the money back home, pumped it into the stock market, and the rest is history. We've been doing great. And I'm not saying the market won't pull back, but the companies that we invest in, they're all growing, and there are new companies coming up that are expanding, and I'm very bullish on the investment climate in Jamaica.
Excellent. And I've said this a few times before. I had my watershed moment maybe 6 years ago when you and I talked, and back then I remembered my portfolio was perhaps 8% in fixed income. I had very few equities. I wasn't a big equities guy at that time, and we traded notes. And since then, I've definitely rebalanced my portfolio so that I have maybe 50, 60% now in equities, maybe 30% in bonds, and it's actually maybe 10% in bonds these days, and 30% in real estate linked investments or properties. So it's important, guys, when you're investing to that you have to invest by asset class to sort of de-risk, generally speaking. So over the next 12 months, we think interest rates could be trending down. I think property values are really high right now, and you can see that with lots of vacant properties and rental prices being relatively soft. We know the equity market is a little soft, and I think it'll be soft for the next 3 months. But as interest rates come down, the relationship between these three asset classes are very interesting. As interest rates come down, equities should be more popular, more attractive. PE should fly. We should see the stock market jumping. And so again, you want to balance how your portfolio in light of what your expectations are. And we also expect in the next 12 months that we're going to see 6 to 9 IPOs next year. The market's going to be jumping again. There's a lot of liquidity in the market right now. It's exciting to see. There are like 5 different offerings out there, mostly private offerings, right? JMMB's got one where they're trying to do 4 or 5 billion. NCB Capital Markets has got one where they're trying to do 5 billion. Berita's trying to do one where they're doing 5 billion. But these are all private offerings. If you can't demonstrate that you're an accredited investor, which means you have 50 million in assets, you're earning $10 million Jamaican per annum, you can't get into those bonds. And as Money Mark cited, you can't get into the BOJ auctions unless you have 10. So again, here's an opportunity to, with as little as $20,000, to be able to earn 9.25%. And I would like for someone to show me legally how you can do that, anywhere else within the financial markets. Okay, turning back to a few more questions here from Gordon Swaby. Gordon asks if we could explain a little bit more how the trading of the bonds will work, and will this be done in a similar fashion to equities? So Gordon, the answer is yes. The Jamaica Stock Exchange does have a bond market There are 3 instruments currently listed. And then you have quite a few preference shares, fixed income preference shares that are also on the market. JMMB has one, and JPS has one. What we've seen in the past is these things don't trade with tremendous liquidity. So one of the things that excites us, Gordon, about doing such a large offering is we're trying to improve the liquidity of the bond market. And so we expect that once these bonds are listed on the market, that you would have something that looks just like a stock where somebody could bid and somebody would ask, and in that way the bonds could trade and you would be able to sell the bonds. Additionally, certainly for our Mayberry customers, they would all know that once you have a good bond in your portfolio, that's something you can actually borrow against. So that's another way that sometimes folks can get back liquidity out of their bonds. So 2 ways to get liquidity out of your bonds. Gordon, I hope I answered your question. Yes, you will be able to trade it across the JSE platform just like you would trade normal equity.
And Dan,
Yes, sir.
and our traders at Mayberry will be maintaining an active two-way market in the security, so there will always be liquidity.
Excellent. And that's another great story about one of the things we do at Mayberry. We are definitely a market maker, both in equities and in bonds. In fact, in the equity market, we're perhaps on many occasions we've been the second or third largest trader of equities in the market. So I like to say we're little but we're tallow. And so it's great to have Chairman Berry here because he has his finger on the button, and and it's not unusual for us to do $1 billion single trade on an equity. So we're very serious about equities and very serious about the capital markets in general. And now here's us demonstrating that we can do transactions for ordinary Jamaican citizens to be. Someone has asked the question, Gordon. It's a little. Gary, it's a little bit unrelated, but I'll let you take a hit at this one. He's saying, basically, does Mayberry have any plans to expand its footprint beyond Jamaica?
If the right opportunity comes along, I actually was asked a similar question yesterday in a different interview. And, Mayberry, Chris spoke about, a huge strategic decision we took and step that we took, which paid off huge. And the reality is that Mayberry is high on Jamaica. We're excited about where Jamaica was then and where it is now. And we still think we have not yet started to even touch. We're just at the tip of the iceberg. So we see significant opportunities here in Jamaica. And it has a lot of our bandwidth here. Notwithstanding that, if the right opportunity comes along, we never say no to great opportunities.
Yep, I agree with that totally. I remember in the COVID year taking trips to Guyana or to the Bahamas on company business. So yes, we're always looking for opportunities to expand. Okay, next question up I see here is give me more details on the additional increments, example, monthly, quarterly, etc. So that's coming in from Roshane Brown. So Roshane, I'm going to have to answer you in 2 ways to make sure I've covered you. So first of all, the minimum purchase amount of the bond is 20,000 Jamaican, and then in $10,000 increments thereafter. So you can't purchase $25,000 worth of the bonds or $35,000 worth. You can buy 20, 30, 40, 50, 60, 70, and just keep counting in tens. And then you asked the question about increments, whether monthly or quarterly. So what I can say is all of the 4 tranches, interest is always paid quarterly. So if we close this bond raise on January 6th, the first interest payment date will be on March 30th, then June 30th, then September 30th, and then December 30th. So hopefully that answers your questions in terms of the increments and then the durations in relation to the investment. Okay.
So there could be one more angle, Dan.
Yes, sir.
So another angle could be if you want to add to it in the future, because it's going to be trading on a JSE, you can after it's closed, you can still buy more and add to your portfolio if you want, or sell and reduce the amount you're holding.
Good point. So there will be that unique opportunity where you can buy it in the open market. And then again, it won't be subject to the typical restrictions. So We've seen where when we do the private listings, exempt distributions as we call them, that when you're selling the bond in the secondary market, you can only sell it to accredited investors, and you can only sell it in the minimum blocks of 1 million J or 10,000 US. And so, therefore, the trading of the secondary bond market for private investments tends to still have this hurdle. In this instance, we've come up with an instrument which will be able to trade very freely in the open market and won't have these, very high thresholds for the minimum amounts that can trade. Romain Opportunity says, this is a great opportunity. Thank you, Mayberry, for giving the ordinary Jamaican a chance to participate. So it seems like I answered Romain's question appropriately. It's Money Mark says, all the lands detailed as Maho Bay, Providence, as holdings, etc. What's the plan, development, or exit, or money-making deal here? So Money Mark's asking about Maho Bay lands. Who wants to take that one, Chairman or Gary? What?
Well,
Yeah.
it doesn't matter who takes it. It's creating value, Mark. At the appropriate time, you will see what we're doing with it. But obviously, wouldn't be able to discuss it in this forum.
Good deal. So,
all I can tell you, if you look on the entire Mobe, that site is one of the best potential sites for a hotel.
And you can't find many 10-acre plots of land around that have beachfront property and right in front of the famous Sandals over the water villas, can you, Gary?
No.
I didn't
So
think
that's
so.
another important point. It's right beside a development which was the first over the water villas. I think it's 5,000 US a night to stay.
Yeah, crazy money.
So it's in real estate they talk about location. I think that plot of land that Mayberry holds, falls nicely into that position.
Absolutely, and while we're not actively, developing it just now, each year that we've held it, we've seen the value going up and up and up, and the bids and the offers that come in it go up and up and up and up, and instead what we're doing is using the property as security towards our loan book. So, good eye, Mark. Thanks for that. Hopefully, we've answered your question. Okay, next question coming in is from David Rose. Let me read it. He says, Dan, only CPJ and Access have bonds listed on the JSE bond market. Preference shares are on the main market. The private market is also there. So I'm aware, David. So what we're doing, like I said before, is we're creating new opportunities for folks to trade bonds, and ours will be, fairly unique, and certainly will be the largest bond listed on the market. And so we think that's going to be great. The CPJ bond, by the way, David, is definitely for accredited investors only. So they can't change the status of the bond just by listing it on the market. So I still think it's for accredited investors only.
Right. If I could add, Dan, David, thank you for your usual great questions. But that question reminded me of when Mayberry started to list companies on the junior market. And, there are a lot of people that had a lot of things to say then. And we were very gung-ho, we were very excited about creating new things. And now when you look back, nobody could ever think there was a point that people would have criticized the junior market. And, we believe that, Mayberry had a part to play in that. And we see ourselves embarking down the same road again. So, David, you might look on the bond market at the JSE now. You might not see a lot of companies on it now. You might not see a lot of trading on it now. But that was the case with the junior market back in 2010, right? Not 2010, 2015, I believe. 2010.
2010.
Yeah.
And even 5 years
2010.
ago, Gary, I heard a lot of folks saying, "Oh, I won't buy junior market stocks because
There's the
liquidity,
it doesn't trade much,
and the market cap, blah blah blah." And I
it's too
saw one of those
small.
friends last week, and I was like, "Have you seen the market cap at Last D, Last F, and Last M? Three of them combined, $30 billion. So if that's not big, I don't know what isn't big." And sometimes you have to get into these things early, be like first mover to then reap the benefit of it. When David said CPJ, I got a little bit nervous because I wasn't too sure where he was going with that question. But CPJ is another example of a junior market listing that we did 10 years ago, and their market cap's now like 100 million US. So you got to start small, baby steps, develop yourself before you get big, and that's what we're doing with this bond. I think we're again kind of like a first mover in this regard, putting a bond out there that's a little bit different. There are only three others out there. This will be the fourth, but this one will be a little bit unique, and I think we're going to be creating the market. So when this does well, I'm not going to say if this does well, we will demonstrate to the market that this is yet another way that you can raise big money. You don't have to do it to accredited investors only. And if it works, and when it works, it means therefore that Mayberry would have demonstrated that it works. And we will absolutely be considering it for other corporate clients of ours. So we lead from the front by doing it for ourselves first. And after we've demonstrated that we can do it for ourselves, then we'll be happy to do it for other clients, David. So we're going to be out there doing this a bit more in the future. Okay, got some more questions coming in that I want to take before we wrap up. We do want to wrap up in about 5 minutes in respect to time. Tavia D has a question saying, also given that 3 months have passed, would I still get the 13 months interest rate of 9.25%? So let me see if I can get that right. So whenever the coupon for the life of these instruments will never change. So whenever you buy into the bond in the future, you will always be buying into that fixed rate, and you would receive whatever interest that exists when interest is paid. So typically what happens, Tavia, this isn't quite your question, but I do want to explain it. Interest is going to be paid on the 30th of March and then on the 30th of June. So typically, if you're going to buy this bond in the market, say on the 1st of May, typically when you're buying it, you have to factor in that come June 30th, you're going to get all 3 months worth of interest. Typically, you would have to pay for the 30 days of accrued interest that have happened already from April 1 to April 30th. So just getting a little technical there, but the interest rate's always going to be fixed, always paid quarterly, always paid by the trustee to the bondholder on record on the date of payment of the interest. Kind of like stocks and dividends. It's only the guy that's holding the stock on the day when the dividend is paid that actually gets paid the dividend. The same is true for the bonds and the payment of interest.
So, Dan, I don't know if I could also add
Sure.
to your point. The person who had asked, in the case of a 13-month bond, yes, every 3 months you would earn the interest. And I assume the question you're asking is that after a year where you've made 4 quarterly payments, you only have 1 month left. At maturity, you'd get the principal plus 1 month's interest at that point in time. I assume that's what the question is. So you get your monies quarterly until you get to the last period, and you will then get the principal that's due plus the period, whatever that period. If it's a month, you get a month's interest. If it is 45 days, you get 45 days interest. This is just in addition to the points that Dan had raised.
Thanks for that. I appreciate that. Another question from Tavia that I seem to have missed was, would you have to buy a certain time to get the quarterly interest? For example, if I buy 20,000 in May, do I get da-da-da-da? So hopefully I answered that, Tavia, again.
Yes.
Whenever you buy into the bond, you may have to pay the person selling for their accrued interest. So if you buy 1 month into the 90-day period, it's typical you'll pay that person for the 1 month accrued interest because you're going to receive all 3 months interest when the next interest payment happens. As a matter of fact, if you bought the bond on day 89 for that 90-day period, you're the one who's going to get all 90 days interest. So in that case, typically, you would pay for the 89 days accrued interest, and it would be factored into the calculation. So that's typically how bond sales work, whether they're listed or not listed. Okay. Luchard Morris asks if the bond is rated and what's our credit rating. So we did not choose to get the bond rated. Luchan, I hope I'm pronouncing your name correctly, because the bond is fully secured, and we've made it very clear that the bond is going to be fully secured by 200% In the case of equities, 135% in the case of real estate. And Mayberry is a publicly traded company, and we've shared our financial statements. So you can see very clearly our financial statements for the last 5 years and see the profitability of Mayberry. And from that review, you should easily be able to make your own assessment as to whether you think Mayberry is a profitable company that's prudent with the way it manages its debt business. So we didn't feel it necessary to spend 40,000 US dollars a year to get a credit rating because we think the market can see very clearly who Mayberry is and what we stand for. Okay, got 3 more questions, and then I'm going to wrap up and then I'll ask for final comment from chairman and final comment from CEO Parrott. Dawkins Brown asks, "This is an excellent product. Why did you not go for 20 billion so more ordinary people could get allocations?" I think thanks for that, Dawkins Brown. Appreciate your vote of confidence. I think we have pipeline of business to handle $7 billion very easily. And if this were to be oversubscribed and we could see demand for 20 billion, we would probably be back in 12 months' time when we built up back that pipeline a little bit more, Dawkins. Or we would probably be back with a few other clients that we represent who we think are good corporate credits as well too, who want to raise money. So thanks for that vote of confidence. I look forward to the day when we can have $20 billion raises in the market. I don't think I've seen it yet. We've seen maybe 2 $14 billion equity raises in the market. But I do think our market's getting bigger and better. And as the Jamaica government continues to pay down, reduce the debt to GDP ratio, as Chairman Barry alluded to, there'll be less in the space. That means even more liquidity that needs to be invested. People won't be sitting down trying to earn 7% on government paper doing nothing. They'll decide that we have to invest in the bonds of corporates rather than the bonds of governments. 2 more questions and I'm done. Graham Jervis, this is brilliant, as it will allow Mr. Market to dictate the price and possibly the offer opportunity to MIL in regarding to the trading and the buyback of these bonds. So you're correct. Thanks for that, Graham Jervis. You've always got some good insights there. Good point. And then I think that's it for me in terms of questions. We're really out of time. Gary, first with you and then to Chairman. Any final comments, Gary, that you want to say to the market who are thinking about investing this bond and wondering why Mayberry and, why this bond, why now, or anything like that?
Well, sure. I want to reemphasize the point that, one of the best features about this bond is that everything is electronic. Nobody's going to come to your door with a paper application asking you to give them money and say they're from Mayberry. This is something where you pick up your phone, you call your bank, you can transfer your funds to the account numbers that's in the prospectus. Whether it is you're calling your bank or whether it is you do it on your own personal electronic platform from your phone. And the beautiful thing is that once you're on board, you just sit back and your interest will be credited directly to your bank account every 3 months, and ultimately your principal upon maturity. And I think that is a powerful feature of what this bond is. Secondly, Mayberry is a company, and when you look in a financial services company, one of the key metrics that you use is what we call your capital adequacy. And Mayberry has one of the largest capital adequacy ratios in the financial services sector. We understand and accept that the general public might or might not understand who or what Mayberry is, but the fact of the matter is that we've been around from 1985. Mayberry is over 37 years. We've been doing business. We've gone through FinSac. We've gone through the 2008 credit crisis in the United States, etc. And we've weathered it pretty well. As a matter of fact, we've weathered it better than pretty well. We've actually become significantly more profitable since then. And as I said, I close by saying we look forward to servicing our new set of investors. And it will also allow us an opportunity to grow our business and obviously to make more money, more profits for also our Mayberry equity investors. So I think this is an opportunity for people to say, hey, here's an opportunity to invest in Mayberry's fixed income bonds. And you never know. You might then decide to open an account at Mayberry and also buy Mayberry stock. So we look forward to our mantra is very simple. We're trying to make everybody in Jamaica wealthy. And because when you're wealthy, you'll have choices to do whatever you feel to do. And we feel if you take Mayberry as a financial advisor, you will achieve those goals. So go out, go onto Bondberry and invest. We have 4 tranches, 1 year, 13 months, all the way out to 3 years. Some people think the value is in the 3-year tranche, but we also believe in diversification. You could actually invest in all 3 tranches. So we think that we have put something out there that the average man will like, and I implore you, come, invest, grow with the Mayberry family.
Thanks for that, Gary. And final last words, Chairman, for you?
Well, for me, I'm very excited about this new opportunity, but I just want to spend some time to, thank the Mayberry team for doing all the work to make this possible. People at the FSC, the company's office, the JSE, definitely our attorneys, Patterson, Mayor Hamilton, and all the selling agents who are coming on board, even those who are going to sign up this week. I'm thanking you in advance. Say thank you, everybody.
Thanks, Chairman Barry and CEO Gary Peart. I really, admire you guys as visionaries in the Jamaica financial landscape market. I'm not here just for the money. I'm here to invest my money too, and for the education that I get. And I'm truly inspired to be a part of this team. Well, folks, that's it for today's Investor Forum. I really want to thank you guys for tuning in. We hope you guys are as excited as we are to make more money with Mayberry in our bond IPO. I'd like to thank my fellow panelists today for their insights. Chairman Barry, Christopher Barry, and Gary Peart, thank you so much. Really appreciate your contribution.
You're welcome, Dan.
Also, I want to remind you guys to visit our website at bondberryja.com to view the prospectus and learn more about Mayberry's bond IPO. Your support is always appreciated. And if you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and our upcoming guests on our official pages. So follow us there for all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, folks, and remember, wise investors, slow and steady wins the race. Goodbye.
Jamaica, it's your time to make more with Mayberry Investments. Money under mattress can't grow. Them days they're done. Invest in Mayberry's bond IPO. What's a bond? It's a safer way to invest that puts profit in your pocket. Minimum $20,000 to buy in. And because it's a bond, you get your money back plus interest. It's safe. Invest on bondberryja.com. See prospectus or contact your investment advisor for full details. Make more with Mayberry Investments.